The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Welcome all to a wonderful and exciting day at TFNN, your headquarters for technical trading and investing, as we see a market that is moving briskly higher this morning. All right, I guess in the morning it did. Let's do a quick update, since I did one about 2 minutes ago, just to make sure that it's not off. We're trading at 1864 on the S&P cash. Went to a high of 1867, just over 2 billion shares. I wanted to see somewhere between 4.5 to 5.5 billion shares breaking these highs as we've had in previous attempts. And of course, we're going to be nowhere close to that. The question is just how do we close today, and how does this volume work? I've got a ton of shorts on. For the most part, most of them are down today. So, and some of the other ones not doing so bad. So, if you just looked at the indexes, you'd have to run and scream. If you look at my entire portfolio, you'd have to say it's still a coin toss, because I'm seeing too many things up here. And we'll look at some of these stocks and how they've done today. There were a bunch of them in my newsletter this morning, but we will take a look at them. We always like to start with just a tad bit of history, of course, financial history if at all possible. And today we do have some. This day in 1950, New York City financial executive Frank McNamara and his attorney Ralph Snyder have dinner at Major's Cabin Grill Restaurant, 33rd Street in Manhattan. The check comes, he pays with a credit card. Ooh, discharge the bill. And the birth or the afterbirth of credit is started on this day in 1950. And the first card transaction has taken place. And that's pretty much, we would get to that. We'll get into some other things as we get along. Of course, everybody's probably focused on these moves up here for the highs, and they are going to be interesting. The question is whether or not we get exactly what we've gotten so many more times on just a ton. There's been some that have broken out with volume, but I'd say probably 80% of stocks hitting new highs, they last for, 3, 4, 5, maybe 14 days, and they're right back into the trading zone up at these highs. And I'm wondering if we're not going to see exactly that. Part of what we have today is the setup, sometimes called window dressing. The last 2 days, the last 2 days or the last 3 days. I'm going to have to go back and look at it again. The last 2 days and first 3 days of the month, some people call it window dressing. By their charter, a lot of EFTs and ETFs, and other financial vehicles, other kinds of funds, hedge funds, are all supposed to be 100% invested. The idea is that a money manager is going to hedge those positions. He needs to know that the fund is 100% invested most of the time. And he will, of course, buy long that ETF, and then normally he will hedge it somewhere else. And the question right now is just how much money there is to come in the market. I have a subscription to a thing called Trim Tabs. They actually look at inflows and outflows in the market. My guess from reading about the last 14 days of that is that we're looking at a bust. We had a lot of cash come out of the market, mostly in the foreign ETFs and foreign stocks, at least here in the United States. Not a lot of that's coming back in, and there may need to be some redemptions actually to cover them. Right now, I think we're seeing exactly what we thought we would see with this very light volume. In fact, this morning, at 10:30 I sent out an update just on how pathetic the volume was, and at 10:30 we had the volume that most days we have at 10 o'clock, and a lot of times at 9:50. Just very, very light volume. Of course, we went a little higher, drifted up here, but just a great deal of stocks kind of rolling over, coming back a little bit lower. And I'm looking at the positions I have, and I think there's one. I'm down about 10 cents on it. I think I might take that off before the end of the day just to get rid of just one of my positions. But I think I've got 8 positions, and all of them are, I think, set up fairly right. We're seeing a lot of movement off this top. And in fact, let's take a quick look, and let me bring up a chart actually as we have time. And then we're going to look at some of the other ones I had in my newsletter this morning of stocks, not necessarily that I was going to actually play, but are up here on very light volume. So we'll look at those too. But I wanted to look at Tesla. TSLA. I had some questions in the email. Again, today I'm in the studio, and by that I mean we are going to not have email today, so you pretty much have to post something in the den for me, or you can call me at 877-927-6648. But we'll certainly do that. Everybody in the den today is trying to actually put tinfoil hats on me, but will not let them succeed. Anyway, I was looking at Tesla. Actually was at lunch on the way over here. Stopped, talked to one of my racing buddies. He had a new Audi, but he had a customer there with a Tesla. So we went and drove the Tesla around. Very nice car, but we got to talking to him and everything, and guy basically told me he didn't care that he had to pay $100,000 for it, or that the battery pack was going to cost him $25,000 or $30,000 to get replaced. He just thought it was a neat car, and he wasn't worried about it. But he had to admit that it was probably a fairly poor value unless all the gas in the world is cut off. And then he'll be the only one driving around. So probably has a podcast. Doug Cass, yeah, that name sounds familiar. But I'm looking at a company, and this is, if I'm thinking that this is a sign of a blow-off top, we're probably fairly close on Tesla. The reason I say this is you've got earnings that are just out to the moon. You have them building a factory 3 years in the future for batteries that may or may not be competitive at that time. And just so many other things, just the phony stories we heard this week, mostly on that gap up and the earnings, kind of smack of at least maybe a short-term high. Short interest is far too high on this to actually play it to the downside. But seeing a bunch of other stocks like this finally have crested and maybe even pulling back on a day that we're breaking out gives me a little bit of pause to think that we can rubber stamp and say that this high will hold in the marketplaces. Looking at gold a little bit today, wondering whether or not we're going to see any kind of meaningful pullback in this. I thought today would be it, and said so in my newsletter in the morning. This would probably give us an indication of today, if any day this thing was going to pull back, especially with the dollar index moving. That 80 level on the dollar index has been rather important, and that we clipped that and went down half a buck on the dollar index today. Probably a big push because of the change in the yuan. Wonton tomato. I always think about that. Juan the gardener, wonton tomato. Anyway, the dollar index breaking below is very curious, and whether or not this thing can hold down here will also be interesting. But it looks like we're back to the competitive devaluation of everybody's currency. China's doing it. It looks like maybe the man behind the curtain's doing it with the dollar today, and so we will be looking at some of those. But in gold, you kind of had to look at this thing probably, at least in the GLD, kind of starting to pull back a little bit. I suspect, do we have a gap? Yeah, there's kind of a tiny gap around that one. Let me zoom in here so I can see that 120. I'm going to call it what was the high on that day? 125. Yeah, probably 125 to 126. And could we just come back to that level on light volume? I think we could. But I'm wondering if we don't see a little spur or even some support if this dollar index can stay below 80 and we get a weaker dollar and a stronger move in gold. But it is going to be interesting watching how this market closes today and the volume. Again, fairly light during the whole day, and continues to move down through the first few minutes of the show, at least for the S&P, which is what I pay attention to. And we're at 1863 and 2.14 billion shares. So it's going to be a light day no matter what. The question is just whether or not they can pin this thing. Maybe for the next few days during fund buying, try to hold it up. The question is whether or not anybody was going to come in and buy at all before the weekend, and I think that's probably the light volume. We're probably going to have to wait for the answer on Monday and Tuesday, although I'd love to have the answer today. I think they're going to make this one of the hardest tops to ever short, which normally when you see that, it means that you never get a chance to get back in on the way down, and that is the problem involved in it. But anyway, give me a call, 877-927-6648. That's 877-927-6648. And we'll look in the den real quick to see if anybody's got anything else. Why is CRM going down? CRM. And I don't have any sound effects to play. But we will take a quick look and take a quick chart on it. CRM. So we have basically a fairly decent reversal signal back up here at the top. My guess is that after the conference call last night, there were more than a few people thinking that it was time to ring the bell. He wasn't overly optimistic from what I heard. I didn't listen to it. I read the transcript real quickly, and I think that they're just being very conservative, and I think that is, everybody was hoping he was going to come out and say this thing's going to the moon. I think he was talking about a lot of the problems, and some of them filtered out later that are still from any of these cloud services, which is, can they be effective in foreign markets, especially with the NSA? And I think a lot of people are starting to worry about that. We had the end of the RSA conference this week. Actually, it is today. And that's where all the NSA spooks were. And I think a lot of people are a little worried about it. Anyway, we come back, I'll talk a little bit more about Salesforce and why on what was a bounce, I think, in after hours last night, turning around today. So we'll be back. Give me a ring.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a license to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, I read a little bit more about CRM, and that's pretty much what everybody's talking about. It's just growth rate and foreign growth rate. And there wasn't a lot in there about the NSA, but I'm going to say it's implied. And they just didn't see enough earnings, and mostly because the earnings were somewhat weak on CRM. Now, we're going to look at a few stocks out here fairly quickly. These were in my newsletter this morning, so we'll see how these do. I'm looking at a lot of these stocks up here on light volume. Cepheid, CPHD, which I believe is a it's a pharmaceutical, actually. Let's move that over here so we can get out of the way. But yeah, I'll just read it. A molecular diagnostics company develops, manufactures, and markets integrated systems for testing in the critical clinical market and applications in legacy non-clinical market. Molecular testing for organisms and genetic-based diseases. Anyway, I'd been watching this one just because it tested its high on the third of the volume. You look back at the gap up on January 31st, 54.45 that day, and 2.9 million shares. And about 4 days ago, it tried to prairie dog through the top there, February 25th on 1 million shares at 55.48. So it did go above it. It closed below it. And you're getting kind of the slow roll over here in a lot of these. I see a few people in the den saying the IBB is starting to roll over. We'll take a look at that. Their time frames are generally a little bit shorter than mine, but a lot of stocks up here at the highs, and we're going to continue to take a look at some of these. First Industrial Realty Trust, FR, especially with the real estate numbers coming out today. Wanted to see how these were doing, but if you want to look at either one of the previous highs out here, even being the most generous, at 1.3 million shares on FR from May 22nd of last year at 1.3 million shares, just a hair under $19, or the October 25th high, just a hair under $19 with 1.6 million shares. You have the test in the last couple of days, just seeing 511, 620, and 633,000 yesterday, and let's see what we have today. That's 135,000 today. This doesn't sound like a vote of confidence up here at these highs. I noticed a toll was another one, and I don't think, oh, yeah, it's on my list. I'll go ahead and pull that up, because I want to see how that was doing also out here, and still fairly weak. But this has gone against its high from May 22nd last year, $39.25, 10 million shares. A couple of days ago, 7.1 million shares, and of course 3.8 million yesterday, and 2 million shares today, and starting to move back down. So we've had a pretty slow roll on a lot of these companies up here at the highs. Infosys is another one. Let's take a look at this one. This one's banging against its previous January 22nd high with 2.4 million shares. Got up to $61.66 and blew through it today. And the question is whether you can close below it. But certainly 433,000 shares today, or even 550,000 yesterday, or the day before at 900,000 shares, far short of any of these around the January 22nd high. So we are back up here with very light volume on the majority of stocks, and that's what I'm kind of trying to show you today. ServiceNow, this one looked like it was going to roll over. Actually had a small day trade in that today, and did pretty good for me. But I rarely day trade. I just like this one, just with a third of the volume up here at the highs. Just looked like me a nice play to get a couple of bucks out fairly quick. But ServiceNow, OW is a symbol on this, gapped up on decent volume. One of the things I don't like is when stocks gap up and it can't close higher than their open, especially with a deep gap. And we're seeing a lot of that these days. But that was the January 30th high, $78.48, 6.9 million shares. And, of course, we gapped through it yesterday, 2.3 million shares, and start rolling over here today. Now, if you want all these kind of charts and a lot of my scans, you can always get a trial of my newsletter and actually subscribe to it. But I have been told I have some of the best scans in the industry, especially when you're looking at highs on lighter volume. Anyway, we're going to get to PPG when we come back, and hopefully your phone calls at 877-927-6648, or maybe your questions in the den.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we see, we had a couple of requests for stocks in the den. Athena Health is one. Of course, we were looking at a lot of these stocks that just kept ticking up every day. And, man, this is kind of like I'm seeing today in a lot of the stocks I have. They are rolling over on light volume off the top up here, which is you kind of like to see them come up with heavy volume. But on a day when the indexes are up, probably not a bad thing to take a look at. But I just see a ton of these out here and a handful of stocks driving the market higher. But again, a fairly light volume on the broad indexes and incredibly light volume elsewhere. So and I see what you're looking at. Things starting to come back in the first real tick down. If you can follow that up on Monday, you probably have this thing coming back to 180 to touch the top of that gap. Nice trading range of about $20 on Athena Health. Anyway, talked about Now, and did we get to PPG? Can't remember now. One of the stocks actually breaking higher today. One of the things you do not have, though, is the volume, and this is what's so troubling on most of these. January 17th, 192.23, 1.8 million shares today, 561,000 shares, and it is. This is the market that we're looking at so much. And PPG, of course, big into making car windows and car paint and car other materials that go into the manufacturing of cars. And you probably want to be looking at any of those car sectors and saying what's happened out here. Serpethia Therapeutics. This is one that kind of interesting, just in the fact that it's come back to actually test its gap. And if you're talking about a sick puppy out here, not bad out here. I don't like to chart stocks below $30, but if you were just looking purely at a pattern, this one is one sick puppy with a high volume low out, monster high volume low out here at $12.12, going back to November 13th last fall. Would you have 38 million shares? Really never got a test. And you could probably set this up for a decent test, but come back up to the gap here, and just a very interesting. Even if you just go back to the January 21st high out here, 2940, 4.1 million shares. Got into that on the 24th with 2.8 million shares. It's gone above it, it's closed below it, and we're seeing a little pressure, not volume yet, but I suspect we might see that in the next couple of days on a lot of these stocks. What else do we have? ProShares, Ultra S&P 500 SSO. And, it's, you're certainly not seeing a lot of juice back here. You certainly have high volume lows again. In this case, that huge day of the 3rd of February that's probably going to get retested. And at this point, the question is whether or not you can get enough volume to blow out the bottom in some of these. But certainly, there is untested lows out here that need to be tested. Symbol is SSO on this. What I'm really keying off of is the January 15th high at 102.71. 8.4 million shares. We're busting through that today. 3.65 million shares so far. Maybe some of these things are going to hold up here for a day or two, but they're going to need a volume to hold up here any longer. And we've got a hand, all I see. Is there any data on the percentage of retail investors that are trading or investing in the market versus 2030? I don't know. That question seems to be tough. What is the percent of retail investors? Oh, retail investors in this market versus 2013 and 20. Well, if you I have not seen the last couple of years. I know the ratings for CNBC, which are pretty much tied to retail investors watching. There's the core people that are always in the business. The variation on CNBC TV's level. And as of a month ago, their viewership had gone down to the lowest since 1996 or 1998, something like that. So my guess is that you can infer from that the fewest amount of retail investors placing their own trades is probably at a low that goes back to probably the 1996. Certainly people would be watching if they were investing as retail, and they certainly are not putting eyeballs on CNBC. Most of the people kind of stung have decided to either buy ETFs and just ride them through, not pay a lot of attention and not buy or sell a lot, or go the 401k route and just put money in and turn their back and just say, Mr. Market, I don't care what you do. I'm just going to leave my money in. I'm going to go over here and fish. So I don't see that. I did see a couple of people come out from retail investment firms. I think it was Ameritrade, and just what they were doing. And it was somewhat problematic. It was, how can I say this? I think they were lying. Maybe that's the easiest way to say. Just they were, oh, we've got so many people and the engagement is high and all that. And he never would cough up any numbers, which makes me think that it was all a dog and pony show. So I'm much more willing to believe the numbers that we see in CNBC for who's really investing. Now, one show that gets consistently high ratings is Kramer. Now, he's found a following, but besides that, most of the shows are not doing very well. And I want to update what we have going on here. We'll get to a few more of these stocks. Again, you can give me a call at 877-927-6648. We see a little bit of movement down here, 1862, 2.3 million shares, or billion shares on the consolidated New York Stock Exchange tape. So a little tough. Anyway, keep an eye on all these. The next one I want to look at here is Constellation Brands. And we'll probably get to some of the stocks that had earnings last night. But this is, I think, especially at these highs, we want to be watching a lot of these stocks that have made their way up to these highs and whether or not they're going to break through. Constellation Brands is STZ for this symbol. And probably a fairly decent amount of this gap needs to get filled, down about $72. So we'll watch that. January 14th, it made it high, $81.56, 2 million shares. When we get to the last 4 days, we had 1.2, 900,000 yesterday, 600,000 shares today, and a doji. Got to a high of 82.84, so we've gone above it. And as long as you continue to close below 81.56, you've got a sell signal, and maybe you get that yet today as we still kind of roll back over here late in the day on a lighter volume, but not a surprise. But now to think that we're going to instantly fail probably in the next couple of days, probably kind of tough. My guess is they're going to do everything they can to keep this market up and push that 401k money in at the highs. But I just don't see a lot of juice today at the end of the month. You have to think if they thought that it was really going higher, they'd be putting their money in today if they were fund managers, and I just don't see it. 1861 on the cash. So, and the volume is just very, very light. But we could see a close much lower. I'm just wondering just how bad it is, and maybe a lot of people are starting to scratch their head late in the day going, hey, we ran the flag up the old flagpole, and no one saluted. Do we have a call in there? I heard the phone ring. Nope. Apparently it was Domino's or somebody. Okay. Toll. We talked a little bit about this already, but I'm going to look, maybe when I get a chance to get to the break, dig up some more stocks in that lane. Texas Instruments, another one up here on lighter volume. And let's take just a little bit better look here. When we look at the January 22nd high, $44.82, almost 10 million shares on January 22nd. So let's go back through the last 4 days. 5.3 million shares, 4.5 million shares, 4.3 million shares, 3 million shares for today so far. And of course the highest anywhere within 0.5% of the high, 5.3 million shares. So what are we actually seeing? It's going against that high that had 10 million shares, and the best chance that you can say is that it had 5.3 million shares close to that high or inside that candle. And you know, what do we really truly have here today? 3.3 million shares. So we're about a third of what that last major high was. And especially what I like in this chart is just the high volume energy down here at the lows, and the no energy, and a nice roll off over a kind of a right shoulder just on the bars out here for that. Okay. No, my friends are not talking about stock market at the cocktail parties. Sugar down, Kramer's ratings have fallen off. Yeah, I think they have too, but I think he's still the best one. And of course, you got to figure that retail investors probably work for the day, and about time that they get home. The last 30 minutes of Fast Money and his show seem to be the highest rated, but I suspect that is because people are just getting home and they want to see that are what I would call non-active investors, one that actually have another job. But yeah, you see when I've looked at the ratings, you see the last 30 minutes of Fast Money and his show, and I think it just has to do with the amount of people that can come home and actually watch. Doesn't that seem a strange given out? I don't think so. I think we still have a lot of people that were bit in the .com high and even in 2000 high. I don't think 7,000 pop. I don't think those guys are coming back. If history's any indication, people burned severely in the stock market do not come back in their lifetime. It almost always takes a generation to come back. And this case, I think it's a generation of people, for the most part, from offshore. But we will see. Yeah, Kramers are played later at night. Yeah, maybe some of those, maybe some of those things, those numbers that I see are in that. But the numbers are very low. Even with his numbers, they are back to 1996 levels, and that probably tells you everything you need to know. And I can tell you from just what Tom does, especially at these trade shows, or granted, there's the internet is a lot more active, but it was active at the .com highs. So and there were blogs and everything else for finance back then. And I don't see any 1,000 people crammed into a church down there off of Dale Mayberry RFD here in Tampa with traders, nor people talking about it at lunch. But we were looking at it. And thanks, we got people calling reversals out here that we've been pretty much waiting the whole day on. We are back down under 1860, so we will take a look at it. I still don't like that dollar movement out here. That was the one trade that I have out here that I may lose 0.1% on, so I'm not going to worry about it. But I kind of like almost all the other positions I have, and the fact that a lot of these have rotated off of very highs that they've had. Vera Bradley, this thing certainly has been banging off highs, but what I was really looking on this one was the July 23rd high at $26.33, 1 million shares. And, of course, got into about half that yesterday. It has spiked about it. It has closed back below those lows. Little doji out here for yesterday. And when we look at today, kind of, you might call it a hammer candle or a dragonfly doji out here. Not a whole lot, but certainly 334,000 shares is nowhere close to coming to a million. Now, one of the ones that has broken out and higher is material selector, select sector, spiders, the XLB. And I'm really interested to see how this, certainly no volume today, but I have a feeling that maybe this is a little leftover from everybody getting into commodities and out of maybe stocks at these highs. And it is going to be interesting. What do we have here? We've got about 30 seconds. Anyway, now this one's a good one. We're seeing the last major high on January 21st, 7.3 million shares at 46.57. You kind of touched it yesterday and with 4.8 million shares. Today, 3.3, 3.4. Anyway, I could do this all day long. There are enough stocks up here at these highs to go back and look at them. So we've gone through most of them today. Hopefully you give me a call to wrap up the show at 877-927-6648, or you can post something in the den. We'll be back in a moment.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I tell you what, I've been using one particular keyboard for so long. It's the Microsoft Natural keyboard, and just because I spend so much time in front of a computer, I don't want my hands ending up look like lobster claws when I'm 80. So I always use that, and I get to another keyboard now, and there's just absolutely no way I can use anything else. And I did it again. Either that or there's something wrong with this keyboard. I can't get the A, or maybe I'm used to the A in the position it's at. But hopefully we can get it going here. And I'll get this one last stock into the end of the show. Okay. XOMA. Okay, got it. Now, all we have to do is bring it up. Anyway, keep an eye on that select thing. The other one is this Zoma. And carpal tunnel. Yeah, I'm just looking here. Now we're down to 1857.43. 1857.43. So it looks like we're going to roll over 1856.98. I think I just saw a tick hit my floor. Maybe it hit my shoe out here. I bet we're probably rolling some advanced decliners here. 1856.84. So I'm just up 2 points now. So not unsurprising. Anyway, I was looking at Zoma. And certainly looking at some of these that have broken highs on lighter volume. This certainly has, and of course another one in these biotech space. Certainly looking at the January 13th high, $8.99, 6.2 million shares. Broke above it with 4.6 million shares, and of course that will not stand. And quick reversal back into it now, finally starting to get a little bit of price volume movement, but probably headed back to 675. I don't know if anybody else had anything in the den here for me, but we'll check real quick. NDX, everything else. Let's look at the volume, 2.45 million shares. Again, this is going to be a tough one on volume today. And what else can you say? Just another test up here at these highs with a lighter volume. And the question is just, is this in today going to get ugly or not? And my guess is the ugly comes next week. But we've had yet another test at the highs and the push with light or no volume. Of course, you could almost see it coming this morning. I wrote in my newsletter that you had a good chance of testing these highs on extreme light volume again today, just because it's a Friday and you just don't get that kind of volume. 1.6 billion shares in the NASDAQ, so it is one of these things where you have to look at it. But I'll be working on an update for my subscribers on the path and sending out the Tech Insider here probably in a few minutes as we get off the bell, now that we've got some kind of conclusion for today's action with an hour to go. But volume picking up, S&P ticking down, and should see some of these other stocks starting to break a little harder, even if you were a little early to be short. A lot of times it just takes a lot of sitting on your hands until the market does break. And just checking to see, that's not it. Anyway, I'll be on in the first hour of the Tom O'Brien Show. We will be talking technology. Got a lot of interesting stuff to be talking about. And then we'll be back with you Monday at the same time between 2 and 3. And remember to sow when you can, not when you have to, because it might be a day like this. Anyway, we will see you later.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.